let's start with a brief introduction about yourself. If you could tell a bit about who you are, what you're doing, what you've done so far, that'll be an interesting start.
Yeah, sure. So I've got about 30 years at the intersection of capital and computing. Got started very, very young. Grew up in a place called Sioux City, Iowa. It's where Gateway 2000 Computers was founded, which was the computers with the cows on the boxes in the mid 90s. And then we were about an hour from Berkshire Hathaway in Omaha, which is Buffett and Charlie's firm. So from a very young age, it was those two things and the dots connect looking back. So that's kind of been the pathway I've taken over my career. And it's gone everywhere from the boardrooms of the Fortune 1, Fortune 5 to earliest stage startups, not even an idea, just a dude or a gal with, a glint in their eye. And then I straddle private equity and venture capital, have for the last, I don't know, 10 years or so. And then I've had a number of my own companies and initiatives. And at this stage, I have my own family office. My partner and I have done well. And one of our values and missions is to help other people build their businesses. And so we created a new power brand and product advisory firm called Team, where we
Mhm.
bring basically both of our 30 years of experience, 100,000 person network of investors, business owners, service providers, operators to bear
Wow.
to basically take, um, let's say, founders, business owners, and businesses with the right core values, the right products and services, and take their growth rate from like flat to like straight up and down. And the idea is to use everything as a subset of growth. So that would be product, technology, brand, revenue acceleration, operational capabilities. And as soon as we get started, we just flip the switch on a number of different dimensions and we just go. And we think that we can do pretty well in that world. So the $0 to $1 million, 0 to 1 product has been figured out. We can do that really, really well, really, really quickly. The 1 to 10 million, I'm working on productizing that to instead of like 5 to 10 years in the VC world, I want to get that down to like, I don't know, maybe 3 to 5. And then I've operated at the 100 million and a couple billion and even 10 billion level. So I'm about halfway through my career, and the second half is going to be just, I think, a lot more of this over and over and faster and faster. And so that's it for me. How about yourself?
But I mean, yeah, let me first soak in everything that you've said. So there's a lot of interesting things you're doing, and obviously your experience is probably what my age is. So uh, amazing, very amazing. I'll give you a little bit more about ourselves, right? So I started off working at a US based startup called Fab.com, which was
Oh
a
yeah.
unicorn back
Hmm.
in, yeah, you might have heard of it back in
Yeah, I'm
2011,
familiar
2012.
for sure.
We had like Ashton Kutcher and a few other interesting folks invest. Uh, I basically joined as a very early stage employee, worked there for a couple of years, then quit to start my own startup with my co-founder. What we were looking to build was what we know today as Docker is what we were planning to build back in 2012.
Hmm.
That's also the same time when Docker was being built in the US in stealth mode. It just happened that we were thinking of the same ideas. Obviously, they executed it much better than we did. Um, we didn't really have the capital. We were not able to raise funding to kind of build the whole product out. So, like about 6 months into the whole building journey, me and my co-founder, we ran out of our savings. We didn't have much savings because we had only like 2 years of experience in the corporate
Hmm.
world. So we were just exploring what next. Uh, a few consulting gigs landed our way because of our experience working with startups. So that's what we did, and that led to more and more gigs, and that's basically how we started working with a lot of US based founders, early stage founders. You might have heard of this app called List App by BJ Novak, which was very famous back in 2014, 2015. Uh,
Hmm. I
I'm not
remember
sure
the
if you've
name
heard.
BJ
Yeah,
Novak. I don't
so
remember the list thing. No.
BJ Novak is like a Hollywood celebrity. He's an actor. Like he's been in the series called The Office. So he had a startup called List App. We designed, developed, and launched it for him. It basically was like Twitter, but in the form of lists. So everything that you write is a list, right? It could be a
Mhm.
list of the best places to eat, uh, or top five experiences. And it could be anything. It's purely an editorial platform, and he got a lot of interesting folks from Hollywood as early users. So the content was really high quality. That's a product we scaled quite well. Um, some of the other products, like we work with Pizza Hut. So we grew into becoming a consulting company, working very closely with early stage and idea stage and growth stage startups and helping them build their product, design their product, and helping them grow. That's basically what we do now,
Mhm.
right?
Great.
Um,
Yeah.
yeah, and in terms of your journey, the things that you've done, I think you've spent more time, or you're spending your current time as an investor, right? So the conversation I would love to have with you is very different from what I've been having with other founders. With them, it's about their journey of the startup. But with you, what I would like to understand is the other side of the table, right? Like every founder wants to know how to pitch to an investor. What is an investor really looking for? What kind of investors to pitch to, right? And how do you find them, etc., etc. So, as an
Mhm.
investor, I'm sure you have a lot of deal flow. You have to go through a variety of different decks or deals. What do you look for when you're evaluating a deal?
Yeah, I think we have to back up and just talk about what are the requirements of different investors because they're not the same. And I'm going to use three different categories. One is the venture capitalist, two is the private equity investor, and three is the value investor. So the venture capitalists, their primary metric is like user growth or revenue growth. The private equity investor, their primary metric is EBITDA growth, essentially profit. And the value investor, which is primarily public companies, publicly traded stocks, Russell 3000 type companies, they're looking for free cash flow growth. And so essentially what happens is you move sort of up that growth curve and like how big and sophisticated the companies are, then you're actually moving down the income statement from revenue to profits to then what's left over and continues to build as the cash flow stream. And that's where Warren Buffett and Charlie Munger played a lot of their time, right? Like they wanted to own the business outright, take all of that cash, reinvest the cash, and then grow again. And so basically, what you have is a cash generation engine and a capital allocation flywheel. So essentially, if you look at me, like what I'm looking for is I've found that when I and my partner have decision control, our growth trajectory and our success rate is very high. The growth rate is very steep. When we don't have decision control, it's it goes down. And I mean, we have
Correct.
plenty of examples, and that's just literally the correlation that we're seeing is very high correlation. Um, so basically, unless I have controlling interest, which we've been doing this so long, I can essentially just create a business from scratch that I want, and then like accelerate revenue. We can build the brand, and we can just go do it. We got plenty of partners and people where we can do it. So I don't like invest in the early stage startup thing because I could go execute on it and own it. So I have a different strategy, which is a different approach than the venture capitalists, the private equity people, and maybe even some of the LPs that run pension funds or endowments, which is give me a founder that's already bootstrapped or a company owner that's bootstrapped a company to about $1 million in ARR, has some sense of profit, and they're at a critical growth moment where they need working capital in order to like unblock them getting to the next level. And it could be as simple as like, I need to buy these certain things, or I need to finish this thing on the product to help me scale because I'm reaching a certain thing. And that's really what most of the venture world and is going to look for at the early stage. Like, are you strong? Do you have the strength? And so um, they will typically come to us and they need help. And so we will do a agency approach, which is basically a litmus test. Are you strong enough to hire us? Is your business strong enough to hire us? And if it's not, then you got to figure out a way to just start generating cash. And I think far too often, many startups have got lost in this maze, like all these vanity things and metrics. And it's like you're kicking the can down the road. Like you can only fund your company with three things: customers, equity, or debt. Debt can get you in the death spiral if you don't have cash. Equity, they already want the cash. So, in every sense of the word, is customers, which means you need revenue, which means you need to fill a gap for a customer, charge them less than how they value that gap, and then keep a small percentage for yourself. And that's it. Everything else is kind of BS. And then in the PE world, they've come all the way down to lower middle market, which is about $7 to $10 million in recurring revenue with high retention. And it's mostly in the SaaS space. So anything outside of like SaaS recurring revenue, 95 plus retention, like you're just not in the ball game. And then they're going to hold it for about 5 years. They're going to do some financial engineering. If they're an industrial, maybe put an ESOP profit sharing plan in, and then integrate a bunch of products together and then flip the business like they were flipping a house. And then public companies are just looking for growth. That's it. Everybody needs growth. So that's a different narrative than you're probably going to hear on the internet and from everyone else. But it's the one that I've found is the truth of the matter across the board. So I'm staying on the truth road, until I find new truths that shift my mental model and I'm onto a new path.
So for startups, let's say today that are at the $1 million ARR mark, right?
Mm-hmm.
You said that's the segment you're looking to work with or are working with. And you said there's an agency model that they have to start with you with, right? So what is that agency model? What is the service that they'll be getting, and like what kind of results? And within that, like how do you segment or pick? Is there an industry specific approach, or are you open across like what is your process?
Yeah, it's industry agnostic. Typically at that level, the growth lever is very simple things like add sales team, add customer acquisition or growth rate, or like add sophisticated product management or engineering, right? I mean, it's like these massive things in order to like capture and create value as a business. So what I've found after doing this for a long, long time and working with a number of founders and business owners is the shape of that existing business is always different. The founder has different skill sets. They may be a salesperson, they may be an engineering person, they may be a marketer. And so they're strong in one area, but maybe not as strong in another area. So we're agile enough to come in and figure out what those missing puzzle pieces are that are actually going to drive value for the firm, which is profits, cash flow, free cash flow. And how do we take it from like a long-term thing from 2 to years, a year, 6 months down to like a month? How do we start generating cash and recognizing that revenue immediately? And the equation for that is different. So, I can't just sit here and say, you know what, we're going to add like a 2 week design sprint, or, we're going to set up your CRM, like, or we're going to run this really good fundraising process that you run for yourself. Like it doesn't work. It's like there's 20 different things that you as a business owner have your fingers on the switches, and we need to figure out prioritized which one is the one that's going to drive growth. So it's different for everyone, but at the end of the day, the North Star metric is free cash flow growth and keeping that growth curve as steep as possible. And that will attract everyone else, team, capital, customers, you name it. So that is the primary growth lever.
Interesting. So it's usually a chicken and egg problem, right? Like as you mentioned, there's usually something that's acting as a blocker, and they need more money to kind of get unblocked and move to the next stage. But then again, to get more money, people want you to solve those problems first before they give you that money. So like in your experience of working with founders at that 1 million ARR stage or thereabouts, what have you noticed as the biggest blockers? Because when you're at a million ARR, you most likely have got your product market fit sorted, because you're at a million ARR. What are the challenges that founders usually face at that point that you really help with? And do you work more with like sales founders, founders with a sales background, or these are techie founders who don't really understand sales? Or like, where is your sweet spot? Or like, based on your experiences and interactions, what have you seen as common patterns?
Well, on the product market fit comment, I'll add a challenge to that, which is the private equity investors assume 10 million ARR is you found product market fit. And they don't take product market fit risk below 10 million in ARR. And what I often find a lot of companies and startups and founders, they start with their own network and people that know them and or a distribution channel that they were able to set up somehow. And that gets them from 0 to 1. The problem with that is it's a false positive. It's inaccurate because you're not selling to strangers. In order to get from 1 to 10, you have to then go capture people that have never heard of you, don't care about you, are experiencing other brands that are much further along with you, which means you have to steal market share away from the existing thing they're already doing. And you have to create a lot of trust and the fact that you're going to be here in a year or 2 years instead of like going away. So that is the critical area, which means that you need to have a very high trustworthy brand. You need to be everywhere. You need to be quote unquote beating up the market from social, video, audio. I mean, you need to be all over the place, referral networks, lead gen, all this sort of thing. And then you need a product that's going to function. So what I often find is that they will have nickeled and dimed the product, or they caught one engineer and the engineer says, you know what, this is the right stack to use because I know it. I mean, you know this being as an engineer, but it may not be the best one, right? Like a lot of the cool kids these days are using Figma, React Native, Node, SQL, whatever the case may be. Everything goes down to either a document database or, a relational database. So, and then you've got the AI thing on top of it, which is kind of sparking a lot of interest, but not a lot of revenue so far. So the question is, can we find reality? Can we find it quickly? And can we push the lever down on that? So one of the things I actually built was a growth drivers dashboard. I called it a growth pyramid, and it puts the North Star metric at the top. In this case, free cash flow. You break that down, revenue, profits. Where's your revenue come from? Source 1, source 2, source 3, source 4. What are your marketing efforts? What are your advertising efforts? What are your sales channels? What are your referral channels? And then you start running hypothesis tests that are cheap but have high impact. And then you figure out which one's actually moving the needle, and you get rid of the stuff that doesn't work, focus on the stuff that does, double down on it until it stops working, and then you choose another one. Simultaneously, you've got like the product going. Is there product-led growth curves in there? Do you have a financial model in place that actually shows you the profitability of your business? I mean, the list goes on and on and on. So, I mean, this is why it's back to like extreme prioritization on effort, impact, and return on cash very, very rapidly. So, you may think you have product market fit, but I would challenge that. Yeah.
That's interesting because everywhere, like if you look at literature online about startups, right? Like most folks would tell you that if you're at the 1 million ARR mark, you most likely have achieved product market fit. But you bring up an interesting point, and you're right. Like initially, when you're building a product, the people that you would go to is the people the people that know you within your network, right? So that is a different sale versus a complete stranger sale, right? Like someone finding you on the internet through an SEO or just through a landing page and coming and buying is a different sale. So that's interesting. You mentioned AI, right? So like, are you seeing a lot of AI products being built? At least I am coming across a lot of forced AI fits, right? Like there's nothing related to AI that is required or expected, but there is, just for the sake of packaging, you stuff in an AI, open AI integration somewhere just to say you're AI first, so you've got AI integrated and stuff like that. Are you seeing a lot of that as well on your end?
Yeah, the AI thing. So I studied theoretical math and was an actuary in undergrad. So the whole like linear algebra and AI and neural networks I've been close with for the better part of a couple decades. So I kind of understand how it all works, and uh, it's sort of like the crypto thing. It goes in waves, and ultimately, I think what I'm seeing is people are past the marketing front, which could have been there like a year and a half ago. Um, but what I'll say about LLMs, right? It's like you got machine learning, you got deep learning, you got LLMs, and then you've got biologic intelligence. LLMs turn one pixel into a different pixel. That's what they do. It's a pixel to a pixel. It's not real world stuff. Biologic intelligence is real world stuff. It's a lot of sensor input, it's cortical processing, and it's muscle or motor output. So it's three-dimensional objects moving around and manipulation in a three-dimensional space. And so on the LLM side, the question is, what's the use case? So I went to this commercial roundtable with like 50 really smart revenue leaders put on by Simon Kucher in Atlanta about a month ago. And there was one session, it was an all-day affair, and one session was on what are the use cases of AI, especially for the sales thing. And there's like a slide with, I don't know, 20 different use cases. And I think we've got the world's most advanced technology, and you know what it's being used for is closing support tickets automatically that get reopened when you reply, thank you. And then the other one is personalized lead gen, cold emails or LinkedIn outros at scale. So, but I think, look, in a long time span, I think AI is really just an automation layer. You know this stuff as well. And I am seeing interesting use cases. So I think really what happens is you're just basically taking processes that exist that used to take this long, and you're trying to get them down to something that takes this long. So, it's just an efficiency play. And just like anything else on the internet, it's a complex adaptive system. And the internet at scale will figure it out and figure it out rapidly. And then there'll be a rush to that. But I have my own underlying thesis, which is that I'm working on, which is like build more compute, because the internet's not going anywhere. And it's been growing 15% a year for 30 years, and we still only have 66% adoption at 5.4 billion people and 17 billion machines. I'm bullish on machine to machine automated auctions for every transaction at scale happening in real time on behalf of the human. I think that's really going to be the killer use case for AI. It's not going to be like personalized lead gen outreach. So, I mean,
Yeah,
it's like we're going to negotiate over milla pennies and get a good deal, and we're going to constantly be negotiating that all day, every day. And there's going to be a lot of value created. You keep just teeny tiny margins at the scale of internet, and that's a lot of money.
that's interesting. I mean, like we
Mm-hmm.
are definitely seeing a lot of LLM use cases for sure. As you mentioned, it's basically just presenting content in a better way. Support
Mm-hmm.
tickets, as you mentioned, a lot of customer support related uh, functions and AI automations and tools being built that add slight improvement layers on top of what already exists. Um,
Mm-hmm.
we've seen some use case, like we're actually building one use case in the insurance space for a company in the Middle East, where we're kind of improving and automating their claim processes through AI,
Mm-hmm.
because there's a
Yeah.
lot of unstructured data that they're currently collecting, basis which there's a human in the loop who kind of collates that, structures that data, and then passes that further downstream for calculation of claims. We're kind of baking in AI in that segment to structure the data in a better way, or eliminate some of the work. Ultimately, that's what it is, right? When you mentioned efficiency, it's how can we reduce human effort or eliminate human effort in a way that basically increases profits for companies or makes it more efficient for them. So
Mm-hmm.
there's some interesting things, but I'm really like every day on the internet there are like 100 different new products coming out on AI, which is like, man, not more of this, please. Like it's the same thing.
Yeah.
Maybe it's a different wrapper. Everybody's using. The funny thing is everyone's using, at least use like an open source model and do a little bit of fine tuning on top of it, and then you
Mhm.
can at least say, okay, you're using AI in some way, but
Mhm.
straight away just using an OpenAI API, and actually passing all of your data to them is actually not really cool for your business, right? So you're giving away
Mhm.
critical information to someone else who you don't know what they would do with that, in terms of that data. So
Yeah.
that's very high risk, in terms of what companies are doing. Have you like taken on any AI companies that you're working with at this point, or any interesting startups that you'd like to talk a bit more about?
Yeah, there's I have one as a portco myself. It's a robotics company, luxury robotics, in the real world. There's another one which is a friend and former colleague that I used to work with. They're doing some interesting audio stuff in the Hollywood space. And
Okay.
that's all I can say about that one. There's another one who's ex Google, ex Stripe, and he's been thinking about this for a long time. So he just started something very recently. Um, and then we've invented some stuff in our Emergence lab in the beauty space, which brand name brands are pretty excited about. So that's cool. I mean, this AI thing is really just another enabler like mobile. So the real question is like, there's a lot of experiments happening, but if you look back to when the iPhone launched and mobile internet became big, who ended up winning? Well, it was basically like social video and photo sharing. It's like content, and then
Right.
shopping on the consumer side. And then on the enterprise side, it was like we get to work 24/7, 365. So
Right.
Microsoft, Amazon, Facebook, and Apple, So the question is on the AI thing, I think I don't know, we'll see. There's a consumer play and there's an enterprise play. And there's probably going to be like four massive winners, but AI is logic. It's not a product. The product is the thing and the use case around the AI. So the question is like, what does this make 10x better for consumers and for
Correct.
companies? For companies, it's obvious. It's efficiency. I think for consumers, the longer term game is the humanoid robot that lives at home and becomes your new appliance for $250 a month times 8 billion people. It's a $25 trillion market. And instead of having a microwave, dishwasher, washing machine, like you just have a robot who walks your dogs, buys your food, like cleans the house, yada yada. Um, and I think people be willing to pay, more than they pay for their cell phone to get back 2 to 4 hours a day of their time over the course of their life. Like it's a no-brainer. But I think that's going to take more time with the robotics piece. Although maybe not. Who knows? Boston Dynamics just released their electric powered robot and it's a little friendlier looking. So yeah,
There's
man.
there's there's Boston Dynamics. There's a very interesting Indian. I wouldn't say a startup because they've raised like serious money now. They've been around for
Mhm.
10 plus years, called Gray Orange Robotics. You
Hmm.
should check them out if you've got a lot of interest in the robotics space. They're the leaders from India building robotics startup. Like they've
What's
built
the
some amazing
name?
solutions. Gray Orange.
Gray Orange.
Yeah,
Got
Gray
it.
Orange Robotics.
Warehouse fulfillment.
Yeah.
Hmm. Yeah,
So
they're
they
doing
they
like
they
pick and
built like,
pack.
they started with that. They're used by like large companies in India, I think abroad as well.
Hmm.
Large warehouses, Amazon, Flipkarts of the world are using them to kind of optimize their warehouse workflow.
That's
Um,
great. I love it. Long term, I think India is going to kick everybody's ass as this software thing expands. I mean, your net export, yeah. I mean, your net export is software engineering. It's like software and
yes,
apparel. And so it's
yes,
like I mean, you've got enterprise and consumer right there. Like, and then you've got you're a democracy. You guys have good value systems. You got great food. So, and you got a lot of people. So I don't know. I think the next great growth market is to be found in India. I mean, like a lot of the people I've worked with over the last 10 years are they live and work in India. So it's like, I mean, it's already happening.
So tell me this, Sean. I know a bunch of founders at that 1 million mark who would
Uh,
love to kind of like explode and grow rapidly, and especially would love exposure in the US market. So like, are you looking to like work with startups from this region and help them bring to the US or like expand to the US market and help
mhm.
them rapid growth?
Yeah, I mean, I would love that. I think there's plenty of money in the US and there's plenty of stuff coming out of Silicon Valley, but I think the talent is just as great in India and the cost basis is lower. And so honestly, a lot of what I see in the private equity space, I mean, one of the new playbooks that's happening is you'll have a company owned by sophisticated investors and they will have sort of the management team who's local and local, I mean like US local, and you'll have like your C-suite. And then everything else will be outsourced to high quality service providers and at a lower expense because Americans are like super expensive because our everything is expensive here. Like it's become
Right.
ridiculous. So like we're poor just because everything is so expensive. We get paid a lot, but we're poor. So anyways, the only way to keep margin is to like go to a lower, same high quality talent, but a lower
Mhm.
cost basis. And so I just think that I just see this massive like trend of Indian based startups. So yeah, I'm totally bullish on it. And I'd love to help, you know, the whole country just kind of come up. And so yeah, man, like make introductions if it's a good fit, like would be more than happy to help. Uh, yeah, I mean, I'm
Happy to do
already
that.
working with a bunch of folks anyways, so it's like I've never had an issue, you know? It's like, what's the time difference from New York? It's like 6, 7 hours, 8 hours maybe from
Yeah, New York is about
Bangalore.
9.5 hours. Yeah, so that's not
Okay.
that bad. Yeah.
Yeah.
Like we comfortably work with a variety of our clients based out of the North American region. So it's usually, I
Hmm.
mean, most folks in India are used to working late hours. Uh,
Hmm.
this is something I've noticed as a culture difference as well. Like in the US, people sleep a lot earlier. Uh, like 7, 8, sometimes 9 is like the latest. Whereas in India, people go to sleep much later than that. It's usually
Hmm.
midnight or 1 a.m. So
Oh, yeah.
there's a good healthy overlap available there. Uh, Sean, it was lovely speaking with you.